Hi guys, so a bridge to let is basically a combination of a bridge loan and a buy to let mortgage. How I normally see this is it happens in two stages. So you'll have the first stage, which is the initial bridge loaning part or bridge funding part of the process, and then you'll move on to the second stage, which is normally the buy to let portion of the funding. So I tend to use, and I do actually prefer to use, the bridge to let process more often, because then obviously essentially the first stage where you actually use a bridge loan, you can use that to actually purchase a property that you might not be able to get a standard buy to let mortgage on straight away because the property might not be in a lettable condition. So if that is part of your property journey and part of your property criteria, then bridge to let essentially allows you to purchase a property that might not be initially in that great condition or lettable condition, and therefore you can add value. So I tend to purchase more properties that will need that initial renovation to start off with, and I use my ROI tool, which there's a link in the description box below, to first analyse the deal so that I know everything about it and I know roughly my figures and what the end value is going to be. This allows me to add and build in profit from the get-go, and then I can pull that back out and use that and recycle that deposit and use that again. So essentially a bridge to let will allow you to do that. But the main thing about the bridge to let as well is that you also have the second stage, which is tied in from the get-go as well. So you have your exit strategy worked out, and this would come in the form of your second stage, which will be going on to the buy to let portion of the funding. So just beware though, obviously with your bridge to let and your buy and your bridging loans, the rates can be a lot higher. So you need to have factored that in from the get-go. You need to know all your figures, and you need to know everything in terms of time, cost and quality. So you need to know roughly how long the project is going to take, it's going to last, which is going to give you your renovation program. You need to know exactly the quality, which is the spec or scope of works and what you're actually wanting to do for the renovation, and you need to know the cost as well. So you need to have that all worked out before, and I will expand on that a bit later on in the video. Yeah, and I'll do more videos in the future just comparing the two processes, comparing the bridge to let and the bridging process, because I've been through both of them. So just comment, compare below if that's something that you're interested in seeing. Yeah, so on the last project that I did, which was at the Nook, where we have the two flats combined, this one to me seemed a lot more stressful in terms of the processes than doing the Woollerton flat, because I feel like even though it was still stressful trying to push through the renovation, it's been more stressful afterwards trying to find a good deal to go on to afterwards. So I would say the bridge to let overall is still stressful but it's the lesser of the two evils, because then at least you have got that certainty of literally you know what your exit strategy is. You've just got to make sure that you do the renovation within budget and that you do it within the allotted time frame so that you don't lose the rates that they give you for the buy to let portion. But again, I'll go more into that later on into the video. So the next point you need to consider as well is your fees. It does tend to be more expensive because obviously, as I said before, in my head, I normally see it as two stages. You've literally got two sets of solicitors fees that you've got to pay for. So you've got to pay for your solicitors fees while you're going through the first stage, getting onto the bridge loan, and then you've got your solicitors fees on for the second stage when you go onto the buy to let stage as well. And also, if you are like me and you're purchasing in a company name, you need to bear in mind that you've got extra fees that are tied to that also, because I had to also pay for independent legal advice to go through that as well. There are extra fees with the bridge to let, so yes, just make sure you do your research and make sure you have a really good broker on board. Obviously you're going to have to pay their fees as well. My broker's details are in the description box below. You can always contact her if you've got a couple of questions on that. And you've also got to bear in mind with the fees as well, depending on what particular deal you go for, there might be early exit fees as well. Again, as I said, your mortgage broker should be able to go through that with you. They'll go through all the terms and conditions of your deal right at the very beginning. And also the bridge to let deals that I've done, or the bridge to let funding that I have received as well, they've been for interest only, so you'd have to bear that in mind as well. Now with the bridge to let as well, you really need to know what your numbers are. You need to go through and analyse your ROI. I mean, I've got videos also on this channel for your actual buying strategy, so your property, your overall property journey and your property criteria and what you're actually looking to buy, property that you're looking at or you're sourcing, and make sure that it's going to give you the ROI ROI that you're expecting and the ROI that you really want to be achieving. So just make sure you know all of your numbers, you know your end value as well. That is really important. You need to not overinflate that figure and just make sure you have a realistic end value in mind, which again I'll go into more detail on that later on in the video. Also analysing your initial sort of investment figures and numbers and your return on investment and things like that, and knowing that, you also need to make sure you know your figures in terms of your quality, your time and your costings as well for the actual project part of the bridge to let too. So you need to have a robust specification, you need to have a robust scope of works. You can always go to maybe a builder and get them to give you a quote. That could help you out with your specification and also help you out with your program and your costings as well. As I said, a robust program of works there. So don't under or overvalue the time that you think it's going to take to renovate the project, because obviously when you're going for the second stage, or you want to transition from your bridge loan onto the second stage, you need to make sure the lender will give you a set specific time for that. So again, I've got a free Excel spreadsheet that's linked in the description box below. It's a project plan. It will help you out with your scope of work, your specification, and give you a rough program of works and help you figure out your rates. So that's in the link in the description box if you want to download that. So, and this is what I was talking about earlier on in the video. My next point, it's your risk. You need to mitigate as much as you can against all your risks when you're going for a bridge to let, because there's a lot that could go wrong. As I said, you have your exit strategy already built into this from the get-go versus with just getting a standard bridge loan. So again, you've already got that certainty and that sort of peace of mind in knowing that, right, as long as I've gone through the stages on the renovation, I can trigger that second stage and it's with your lender and you can then go on to that. Just make sure you have a backup for your backup as well when we're talking about risk. So make sure that you build in adequate time on your program for you to do each stage of the renovation works, because the lender will ask you for that up front at the beginning when you're going through the actual process. Make sure that you really do have a reasonable renovation time, so that when it comes to that point, when you are renovating your project, you've actually given yourself a little bit of wiggle room and you're not under fire to get the project done, and you're not under pressure to make sure that you get the project completed within a certain time. Because if you don't complete it within a certain time that you've said, then you may lose the rates they've offered you for the buy-to-let. So just make sure that you have a decent amount of time set aside for your renovation. It could be 6 months, it could be 12 months, maybe 18 months, but just make sure that it's a realistic time. So it's not too much where you're paying too much of those high fees on the bridging part of the bridge to let, but also you're not underestimating the amount of time so that you're not under pressure when it comes to the renovation and then going on to the buy-to-let stage. So, but I will do more videos on the actual process of that, and I'll go into more detail in the process that I went through on the last 2 flats that I've done as well. So yeah, as well with the risk, what I had to do on the Woollerton flat, because this was all going through at the time, as I've said in other videos, it was all going through at the time when Liz Truss kind of caused all that uncertainty in the market, and I had really good rates locked in for the buy-to-let portion, and then suddenly all around me the rates just sort of went crazy. So I was under a lot of pressure to get the renovation done so that I could still keep those really good rates. But that to me is, I'd take that pressure over the pressure of trying to find a lender to go to exit out of the bridge loan. And when you're doing the actual renovation part, and when you're actually writing down your scope of works, also as well make sure that you factor in a risk register, and then double down on that risk register and actually list your items, things that could potentially, that are unknown, that you don't know, that could go wrong. Even when you've looked at the property from the outside, for example the roof, if you've looked at it from the outside and you think, right, well I don't think I need to do anything to the roof, put in something, because it might come to light later on down the line that you've got to re-roof and just do a completely new roof. But at least if you've set that out from the outset and you've put a pot of money aside for that, you've got that as well as on top of your contingency. So you've got that there should you need to access that funds to fix that roof. So make sure that you've got it all itemised down. So possibly maybe if you need to dig a little bit deeper on your foundations, for example, maybe you need to do damp proofing. It might look like it's all right, but just put some money aside just in case for that. Those would be put together on a risk register. Again, there's a section or a tab on the project plan that I have that's linked in the description box that actually goes through that. It will give you a chance where you can import items, and it will give you, and you can put on the side of it an actual cost to it as well. So it's good to have that, and if you show that to the lender as well, it just shows that you've thought about things on a deeper level. You've not just bunged in a contingency like 10% for the whole bill, for example. It actually shows that you're going over and beyond, and you're actually costing adequately, and you know, you're actually looking deeper on a next level of could go wrong. So you're basically, in other words, you're managing your risk a lot better. It gives that overall professionalism and that experience of an experienced property investor to potential lenders. So it's a great thing to have. And also, when we're talking about risk, be really realistic with your end value. Just make sure that the predicted end value, it's not inflated in any way. Obviously, don't undersell yourself, but in this day and age, a lot of valuers are tending to down value properties and things like that. So just make sure that you factored that realistically in from the start. Otherwise, your figures are all going to be all over from the get-go, and you're only going to be disappointed, or you're going to get a valuation where you're not going to get as much back as you thought you were, and it's going to increase that overspend limit. So yeah, make sure that your end value is realistic. So things to have as a bare minimum to get a bridge loan: it's good to have experience already with property investing. Even if you've done one property you've purchased and you've done that up, that still shows you've done it in the past. So in their eyes, you're an experienced investor or an experienced property developer. So yeah, having that experience is good to have as a minimum. Having a good credit score, again, I've got videos on my channel if you are struggling with that. It was something that I struggled with, just to make sure that you get your credit history and right up there so that you've got the best rates available to you. Having equity in the property, again, analyse your numbers from day one. Having it gives you an excellent exit strategy, so make sure that you know that you're going to get a really good rental yield back from the property, and that kind of reinforces your exit strategy to the lender. So it says, right, when I go onto this buy-to-let, I'm going to be getting a decent yield. And again, all they're looking for is return on their investment as well. So as long as you've got that there, that would be great. Having a valuable property in a really good area. Again, you're going to be looking at the numbers when you first see a deal. Make sure that you've got a property that's in a highly sought after rentable area. The mortgage lender is going to be getting a return on their investment. So get a property with a healthy demand for rental. Have just a good general rapport and history with the lender. That's great to have as a minimum. I use Precise a lot for some of my lending needs, so I've got a good rapport with them. And just literally having a great overview of the market and knowing your rates that are going to be charged. So literally doing your research and having that there. So guys, as I said, that was me just sharing a couple of points from my personal experience. I am not a financial advisor, I'm not a mortgage broker. My mortgage broker's details are in the description box below. As I've said before, she is absolutely amazing. Contact her if you've got any queries or questions, and she'll be really happy to help you. I've been working with her for years, and I hope you liked the video. Please like, comment and subscribe if you did. It just helps push this video out to more people so that I can help them with their property journey as well, and inspire them to start or get going with it. And if you're wondering about the specific costs of bridge to lets, if you watch this video next, I go through the pros and cons and some of the fees that I've had to face when I've gone for this type of funding. Thanks guys, bye.